Automation can be a huge help for your bookkeeping, or it can be a disaster that costs you thousands. I'm Annie Hillman, owner of 1428 Financial, where we help business owners know and love their numbers. It seems like everyone these days is talking about automation and AI, so let's talk about it for bookkeeping. Today, we're going to break down what you can and should automate and what definitely needs human oversight. Technology companies these days want you to believe that everything can be automated. And a lot of things can, but some things definitely should not. We're actually huge fans of automation when it works well. It can save you time, money, and reduce errors. But some automation causes more problems than it solves. The key is knowing the difference. First, we're gonna get into what you should automate. The first thing are bank feeds. This is your foundation for your business. We definitely do not recommend manually importing all your transactions. A bank feed is an automation that is gonna save you a ton of time. When you use a bank feed for your business, transactions automatically populate in your accounting software. This saves hours of manual data entry and is way more accurate than typing everything in. The next thing we do recommend automating are bank rules, but make sure you set them up properly. Bank rules can be set up for recurring transactions, same vendor, same category every single time. These are really helpful for recurring subscriptions, rent, insurance payments, anything that is going to go to the same category every single time. But you want to make sure you set up your bank rules properly to reduce the potential for errors. The next thing that we think can be automated well are recurring payments and transactions. Automating predictable monthly expenses like subscriptions, utilities, rent, insurance is really easy to do and will save you time each month. This reduces manual work and ensures that nothing gets missed, so you don't face any penalties or interest. The next one is payroll automation. So if you have salary-based payroll where it's consistent every single month, automating this is a great idea. Gusto calls this payroll on autopilot, where you don't even have to do anything and the payroll is run. The last one is bill pay. Now let's talk about what you should never automate. The first thing being the actual bookkeeping process. This includes transaction categorization. This requires business context and judgment. The next one is account reconciliation. This needs human eyes to spot discrepancies. The last one, and this is really important, is financial report review. Human input is critical for catching errors and understanding your business. The next thing you should never automate is full integration setups without proper configuration. A good example of this is the HoneyBook and QuickBooks integration. There's so much room for error. We see duplicated income very consistently with this integration. This creates double stated income and could mean overpaying in taxes if it's not caught. Integrations need proper setup and ongoing monitoring. The last thing we don't ever recommend automating is complex transaction decisions. A good example of this is business meals versus travel meals. Automations can't make judgment calls or determine if an expense is actually deductible. They can't spot fraud or suspicious transactions, and they don't understand the context behind unusual transactions. Okay, now that you know what to automate and what not to automate, let's talk about the QuickBooks AI disaster. Here's why it's so bad. The categorization suggestions are so wrong. I'll give you an example. For one of our clients, it showed their suggestions and it was a transaction from Chevron, clearly for gas, and QuickBooks recommended that it go to sales. QuickBooks AI does not understand your business context, and it creates more work by having to fix their mistakes. Here's the fundamental problem. AI doesn't know your business like a bookkeeper does. It can't spot patterns specific to your industry and to your business. It doesn't understand your specific chart of account preferences. It's not gonna catch that subscription that you canceled but you're still getting charged for. And here's why this matters. When things are put in the wrong category, this leads to incorrect financial reports. Bad data leads to bad business decisions. There are tax implications for miscategorizing transactions. And when AI does make these mistakes, it takes time to fix them. And you don't want to waste your time doing that. Here's how we recommend approaching automation to help your business finances. Automate data collection, but not the decision making. Let technology handle the repetitive tasks. Keep humans involved in analysis and judgment calls, and make sure you have regular review and oversight of all automated processes. If it sounds too good to be true, it probably is. A set it and forget it mentality is not realistic when it comes to financial data. So make sure you're not relying solely on automation for decisions and categorizations that affect your financial livelihood. Smart automation will help your bookkeeping efficiency, but you also need professional oversight. If you want to implement financial automation the right way without the disasters, We help clients set up financial systems that work. Book a strategy call with us if you want to learn about using technology efficiently while keeping your books accurate. If you like this video, make sure to like and subscribe, and we'll see you in the next one.